Hi everyone. So the learning outcome of today's CPD, how the tender sum is obtained, and importance of unit rate calculation, and how to calculate the unit rate. So these are the three main learning outcome that we are going to look. So it's going to be like basic plus something advanced level discussion. Hopefully end of the lesson you will have a good idea about the tender sum. So let's go to the subject. Now all of you know mostly what is a tender sum, but what is your understanding how we can define what is a tender sum? Can you type your answer? What do you mean by tender sum? What is your opinion? The project value, sum mentioned in the letter of tender, or bid amount for a project. Okay. Any different answer? Contractually accepted sum in the tender scope. Value to which says construction will be carried out as per tender document. Overall price for tender. Okay, fine. So what is a tender sum? It is a price offered by the bidder to provide the goods and or services. So this is a price offered by the bidder. This is not a final contract amount. Okay, this is just offer. So when you are submitting the tender, that is a tender sum you are giving to the client. So this is a price how the tender, the bidder achieved, how he calculated. This is what we are going to discuss. So let us have some more discussion on the tender sum in order to have some clear idea. Okay, now we have to understand direct cost, site overhead, general overhead, and the profit and risk allowance. These are the different heading we have to go throughout the lesson. Let's understand how the tender sum was defined here. Say the direct cost and the site overhead together, we can say construction cost. See here, cost. Okay, so this is actual cost. Actual cost mean, do we have the profit or overhead within this cost? What do you think? Is there any profit or overhead within this cost? No. Very good. But these are the actual cost. There's no profit and overhead for the contractor. That is outside this cost. So this is called construction cost. So actual cost for the contractor to finish the work, that is called construction cost. And if you see the overhead and the profit margin, this is called markup. So this is called markup. All together, we can say tender sum or tender price. So this is actual cost plus overhead and profit that is submitted during the tender time, called as a tender price or tender sum. So now what we are going to learn, what is the direct cost, how we are calculating the direct cost, what is the site overhead, what is the general overhead, and how we are deciding the profit and overhead, profit margin. So this is what we are going to discuss. So if you know how to arrive these all the figures, then you know how to derive the tender sum. And further, if you see these two, we have learned as a construction cost. With this direct cost and the site overhead and the general overhead, still that is cost. The profit is here. Even the general overhead also cost. Site overhead also cost. So that's sometimes called net cost. Sometimes called as a net cost. So how the contractor will incur to complete the project is called net cost, including the general overhead. So the pure profit now outside of this cost. Again, this is a tender price, or sometimes it's called as a gross cost. So you should know what is the difference between the net cost and the gross cost. So tell me, by looking this, what is the difference between the net cost and the gross cost? All of you. All of you confirm. Am I audible for you right now? If audible, say I am audible. Okay, very good. So just tell me the difference between the net cost and the gross cost. Thank you for the confirmation. So what is the difference between the net cost and the gross cost? Only the profit and the risk allowance not included, right? So that is a difference between the gross cost and the net cost. So if I am doing one formula, gross cost minus net cost equal to what? If I am doing one formula, gross cost minus net cost equal to what? Very good. That is profit. Right answer is profit. And we can say risk allowance. That is included together. So that is a clear idea. Now you have what is a tender sum. Okay. Now, as we have the first topic, we are going to go through with the direct cost, then site overhead, general overhead, and the profit. Okay. This is what we are going to cover today. Now, what is the direct cost? We have the material cost. We have the labor cost and the plant and equipment cost, and also subcontractor cost. These all are direct cost. These all are the costs the contractor going to be incurred during the construction as a direct cost. So now we should learn how the material, so first item, material, how we are going to calculate the material cost. Anybody have the idea? What do you mean by all-in rate for material? If you know, just type it in the question option. Do you know what do you mean by all-in rate for material? Okay, so I can have so many answer. All the cost of the material, including all other cost. Fine, let's see. Now the terminology what we are going to use, all-in rate for material. It's not just a unit rate or right cost of the material. It's called all-in rate for material. So that have some meaning. So what is included under all-in rate of the material? Price of the material. So what is the price? We are going to buy the material, right? That material price. Is that enough for us to complete the job? Only the material price we are giving and buying the material. That's enough. We have to do some other things also here. What is that? We have to think about the price fluctuation. Okay, you are going to price the material now, but after 2 years the project going to finish, so we don't know how the price is going to be retained. So we have to have the fluctuation cost. Very good. Storage cost. Once you buy the material, you have to store it. So storage cost of the material. There will be a wastage while you are transporting, while you are storing, or there will be a cutting wastage for a reinforcement or tile, etc. So there are wastage. So we have to cost the wastage. So delivery and handling charges. Now, when you bought the material, you have to transport. So that transportation, and you have to store in the material, that you have to load and unload. So you have to unload and you have to store in the storeroom. Again, you want to you want to do ship the material for workplace. Then you have to take the material from the store, that unloading and loading in the vehicle. Then you have to transport to the site. So these all costs should be included. So all together we call all-in rate for material. So do you understand? Maybe you are paying the tax, okay, that should be included within that one. If you are paying any other cost to obtain the material, all the thing. You are paying for a shipping, say transport, right? You are going for a delivery, is like a transport. So if you are paying for a delivery, then you have to add all the cost to obtain the material. Now, let's say in a simple example, you are going to buy a small mobile or laptop, okay, assume. If somebody asks, what is the cost of the laptop? Will you say exactly the purchase cost, or will you include other cost also? What is the right procedure? What do you think? So now, for example, you are a contractor, okay, you are buying the laptop for your staff. Assume this is a material, okay. So will you say this is my all-in rate for my laptop is only the purchase cost of the laptop? We have to include all the cost. Say you have to include the transportation cost, because you have to go and you have to collect it. Or maybe they are delivering, maybe if the delivery is free, fine. Otherwise you are paying for delivery, you have to pay. And other cost, because you have to have the software, you have to have some license, all these costs. Even there are maintenance. So all these costs should be included. That's what you can say, this is my price. Okay, so this is my actual cost. That is called all-in rate for material. Okay, so after we learn all-in rate for plant and equipment and the labor, you will understand what we are talking here. Then we are having the total cost. Then how do you calculate the net unit rate? You know what is the meaning of the terminology net unit rate or gross unit rate, right? Remember in the first slide we have seen. Now you calculate the total net cost. Okay, this is the cost and the total quantity. So now you know what is the net unit rate to obtain this material. Okay, so it's all about the material. Now for example, somebody asks, okay, what about the labor cost? The labor cost, okay, if you are using the labor for transportation, handling, the loading, unloading, that should be included here. All the equipment, vehicles used here, that should be included here. So this is how we calculate the all-in rate for material. So if your material price is say $100, definitely you will be end up with the $120 or $25 as a net cost, because you have to consider all other aspects. Say for example, we want the 100 brick to construct the wall. Okay, can we buy exactly 100 brick? What do you think? No, cannot be. Okay, it is called star rate. Okay, and all the labor and all, it will come as a separate for labor cost. So we will come to that part. Okay, Time being, assume this is a all-in rate for material. Forget about the labor and the plant and equipment time being, which is not relevant to the material procurement. So what we are focusing, not installation, only the procuring the material. Only procuring the material and bringing to the store, and we are going to take the material again to the workspace. That cost only we are talking here, not the installation cost. Okay. Now this is how you calculate the net unit rate. Now all in rate for labor. All in rate for labor. Now in order to obtain one skilled or unskilled labor, even the staff, there is a calculation. So we have to understand what are the rate to be included within the rate. So what do you think? What should be included if you are hiring a labor? Only the salary or something else? Okay, so I am getting so many things. Overtime, accommodation, visa, allowances, insurance. Okay, many things. Transportation, PPE, tickets, tool, paid leaves. Very good. Okay, so almost you people know what is to be included. So let me disclose. First, we have to include the basic salary for labor. So now the basic salary per year, how much we are going to pay. So as you know, you have the labor contract monthly, how much he is going to get paid. So that should be yearly we have to calculate, right? That is called the basic salary. And there will be a increment with sometime, in Gulf area, we have the, you know, climate condition, right? What are the issues we are facing in Gulf area? Definitely, it will happen during a year at least 1 or 2 days. Sand storm, very good. Yeah, sometime rain. Yes, 1 or 2 days, it will happen sometime rain. So we know this is happening in general, right? So we have to we have to have the allocation. There will be a inclement weather. There will be weather condition. We cannot work, but anyhow, we have to pay for the labor. So where we are going to cover, we have to include in our cost. We have to allocate those days. You have to pay some allowances, okay, based on the rules and regulation or based on your company policies. Sometimes the company paying the bonus. So say for example, yearly you are paying 1 month salary as or bonus or 2 month salary or 3 month, depend on. So that also you have to cost. And overtime. Yes, some circumstance come. Maybe the labor have to work overtime, but you have to pay for him definitely. So that overtime payment. Approximately, you might have some calculation how much it should be. Then there will be a public holidays in a year. Again, you have to pay for that one. There will be a sick leave. Okay, there will be a sick leave, or sometimes the labor got injured. You have to pay for him, even he don't appear to the work. And also, you are paying the air ticket, and you have to pay the visa. You have to pay for traveling expenses, like he is traveling from accommodation to the workplace and the workplace to the accommodation. Those traveling costs you have to pay apart from the air ticket. Medical, you have to have the medical facility and the food. Maybe you have to give the food and the uniform and insurance. If you are going to work at site, you must have the insurance and the end service benefit. Say in India or Sri Lanka, I think the CPF, PTF. In here in Gulf country, it is called ESB and service benefit. So as you know, if you are working for a 1 year, they have to pay some basic salary. So it is like depend on the location, you have to have some benefit at the last. And tax, sometimes if the salary, okay, maybe you have to pay for a tax. Yes, you have to pay tax, depend on the country. If any other allowances, you have to pay. So all together, you are getting the rate, right? So yearly you are calculating how much we are going to spend for one labor. That is a total amount. So there are one question: do we need to consider the safety? Yes, we have to consider the safety. We have to consider all the PPE whichever we are giving, right? Okay. Basic salary for labor per year shall be calculated considering the weekend holiday. For example, in Gulf, Friday is holiday, so per month 26 days a working day. What about accommodation? Okay, yeah, still that is correct. Yes, we are calculating that way because in the labor contract it is mentioned. What about accommodation? Yeah, it should be included. Accommodation cost should be included. Okay, how much the accommodation in general say? It's like a bed space cost, right? Labor accommodation, how much per bed space? That price maybe you can put. Or if you are having your own accommodation like a porta cabin or already built, then you can have your own cost. Anyway, you have to allocate some cost for a car, each and everything. So this is how we derived, okay, the all in rate for labor. Now say based on your project, based on your location, based on your place where you are now practice, this part of this may be not applicable. Say for example, now talk about the countries like India, Sri Lanka, Pakistan, or Philippines, right? We have now so many countries. These are the even the people working from their own country. You don't need to give the air ticket or visa, isn't it? So no need to price it like that. Depend on your location. You don't need to include. Okay. Okay. There was another question. As we are including the insurance in prelim, why we should consider under labor rate? Can you please explain? Okay. Two way. If your insurance cost cover under prelim, you don't do the double counting. Otherwise, if it is count here, don't do the double counting there. Either in a one place, you have to keep the price. Okay. Somewhere the cost covered, you don't need uh, do the twice. Okay. Now after that, what we will do calculation. Okay, for all in rate labor, we take the total annual cost, that is A, and number of hours work in a year. So you can calculate per week, per day how many hours, per week how many hours, per month how many hours, per year how many hours. So you will calculate the number of hours work in a year or number of days work in a year. Either way, you want the hourly rate, take the number of hours. If you want the daily rate, take the number of days. Then if you divide the A divided by N or days, you will get all in rate for labor. That mean say for example, one labor subcontractor supplying the labor. Okay, how he is calculated all the cost? He will calculate all the cost, and he is calculating the daily rate or hourly rate plus what he will do when he is giving the labor to you. What cost he will add on top of that? Exactly, his overhead and profit. Don't say just profit. His overhead and profit, because to manage the labor supply, there will be a supervisory team. There will be a head office running cost. So that is overhead plus his profit. So you understand, right? So it is how the all-in rate for labor was calculated. Now let's come back to the our skill rates. Now when you are calculating the skill rate, what are the skill rate available in our construction industry? Just name it. You can easily find in the day work schedule also. Mason. There are lots. Plumber, very good. carpenter, electrician, yes, welder, driver, riggers. Okay, so there are so many. So now how we are going to calculate? Same way, the every company, either the HR or accounting department must have this kind of calculation. Okay, how much they are really incurring. You can derive this rate. Okay, you must have this kind of table already inbuilt in order to identify hourly rate or daily rate. So this is how we are calculating the all-in rate for labor. So now somebody asking how much you are paying for labor, will you say exactly salary or will you say A divided by 12 month? What is the right answer? Yes, A divided by 12 month. That is the right answer. Okay. If somebody asks how much you are paying for labor, don't say the salary only. Say for example, you want to open your company. Okay. You are hiring someone. Don't say exact how much you are paying as a salary. Okay, you are paying for a labor or the staff what you are hiring, maybe they are getting only the basic the salary what you have mentioned in the contract, but you still you have to go through with all the things. Now when you come to the Gulf, we have the migration charges, right? You have to apply for the visa, there are process. So these all are cost for us. Okay, now all in rate for plant, how do we calculate? There are two ways. The plan can calculate. One is by hiring a plan, how much we are going to cost, and by purchasing the plan, how much we are going to cost. So there are two ways. So for a hiring, if you are hiring a plan, say for example, most of the company they are not going to buy the plant and equipment, they will go for a hire. Say as a company, some company they are not hiring, they are not procuring the car for their transport. They are going for a rental only, right? So if you are hiring a car for rental, what are the cost will be incurred for a company? Just give me all the cost. What you think? Hiring. It could be car or any heavy equipment. Definitely, we have the main cost. What is that? When you're hiring, when you are going for a renting, okay, that means hiring. What should be paid? Rental. Yes, very good. That is the first cost. Okay, if you see, you have to pay the rental cost. So if you are hiring generally for the rental car, that should be include the maintenance and the insurance, right? Because the car company itself, they have to take care about their asset, and also they have to provide the insurance, isn't it? In Gulf country, that is mandatory. Yes, even other countries also who in the rent a car should be covered by the insurance of the rent a car company. Okay. So rental charges, operational cost. If you go to the operational cost, there will be a fuel cost for you. There will be a driver or operator cost. So these are operational charge. Since in the hire under hire maintenance cost covered, we don't put under operational charge the maintenance cost. Then we have other costs like a mobilization cost. Now you want to bring the, say you are hiring a bulldozer, right? So you want to mobilize to the site and demobilize, and maybe other relevant cost, some payment you have to do for authority. So this all cost should be included. So when we are hiring, okay, you have to calculate all the cost, the total amount, say A. So how do you calculate the all-in rate? Take the total amount that annually going to spend for this plant or equipment, the number of hours it is going to work in a year. So hourly rate going to be total amount divided by the total number of hours. So this is how we are calculating the all-in rate for hiring a plant. Now, when it is come to the purchasing a plan, what is the cost we have to consider? If you want to calculate the all-in rate for your own vehicle, what you are going to? So, what are the information you need? Yes, I have so many good answer. Okay, so the factor what we have to consider first initial purchasing cost. Now, for example, you want to buy a vehicle, right? So, what do you do initially? You have to care about the initial purchasing cost, right? So that cost very important. That is a very big cost. Then you have to have resale value. Why we have to calculate the resale value? Say for example, you are buying a car, okay, and you are going to sell after 3 years. So what is the resale value after 3 years? You have to calculate. Why we have to calculate the resale value? Any reason? Any reason? What is the purpose? We are calculating the resale value not to calculate the depreciation. Yes, how much it's depreciated, how much we are losing throughout the year. That is the cost we have to calculate. Then the lifetime usage of the plant, how long this plant we can use it at site. When the time is increased, what will be decrease? When the usage life cycle timing is increased of the plant, your resale value is decreased, but at the same time cost of the cost usage also will decrease. Say for example, you are buying a one car, okay, selling after 1 year, you have the big loss. But selling after 5 years, you don't much lose because you have used 5 years. And that depreciation value definitely going to be more than the value you are going to rent or pay for some other extra resources. So therefore, we have to decide whether if you are going for a purchasing a vehicle or any plant, you have to think so many factors. One of the factor time. So you are going to use for a short time or long time. That based on that factor, we can decide whether to hire or rent. Okay, whether to purchase or rent. So we have to see what is the average working hours per year and operational cost. So what is operational cost? We have to do the maintenance. We have to pay for a driver, right? So those costs. Then license and the insurance cost. So if you are having the operator, then you have to have the license for him, and you have to have the insurance for both driver and the vehicle or the equipment. And we have the every time we have to do maintenance, oil and grease, any other relevant cost, maybe depend on the site condition. So including all these costs, you will calculate total amount that you really incurred during a certain period. So take the total amount, take the total period hours, then you will get the all-in rate for hourly or daily based on your the way you want. Either you want hourly or daily, you can calculate. So this is how we calculate the all-in rate for purchasing plant. Now we'll go to the overhead, then profit, then we will understand how one item of the construction unit will be priced. Okay. Now overhead. What do you mean by overhead? What do you mean by overhead? Anybody can define what do you mean by overhead. Somebody asked, I don't know what is the overhead. Can you explain what is overhead? Okay, let us understand what is overhead. The cost which are not related directly to the works. It is not directly related to the work, but those are very important to complete the works. So that is called overhead. There are two types of overhead. One is the site or project overhead. Another one is called head office or general overhead. Site or project overhead or head office or general overhead. These are the two different overhead. So let us understand one after one. Site overhead. So let's start with the site overhead. What do you mean by site overhead? Any example? I believe all of you are quantity surveyors. You have the experience. So all of you just put one example. What do you mean by site or project overhead? Okay. Supervisor, site staff, engineer salary, utilities, equipment, site establishment cost, site office, admin officer, okay, electricity, mobilization and demobilization charge. Very good. Yeah, bonds and guarantees prelim item. So fine. Prelim item is a generic answer. Don't say. Already fine. What is that? Okay. Fine. So let's see what is the site overhead. The project or site overhead cannot be directly identified with the work. Okay. First. So for any overhead item which could be directly related to the operation of the site but could not be identified directly to the work are considered as site overhead. Now, for example, in generally the site overhead item during the construction you can see, but after the construction you cannot see. For example, tower crane. Can we see after the finishing of the project? No. Can we see the site offices, storeroom, right? You can't see them. So to complete the project, you need them. But once the project is done, you don't need them. So those are site office overhead. So you have listed so many things. So few of them you can see. Most of you have mentioned more than what we are here seeing in the list. Those are correct. Okay. So site office staff salaries, operational cost like a utility charges, right? Site office, bonds and guarantees. There are so many items will come under the site office. Mostly the site office overhead item where which bill covered in the BOQ. Which BOQ part will cover the site office overhead mostly. Very good. Preliminary bill will cover most of the site overhead item. Okay. So whichever not covered under preliminary only we have to include within the overhead. Okay. When you are pricing the all-in rate, there are profit and overhead coming, right? So that overhead you are going to calculate the exceptional cost. What is not included in the site office overhead, that only you are going to consider as a percentage. So we will come to that discussion a little bit later. Okay. Now head office or general overhead. What do you mean by this? What do you mean by head office or general overhead? Yeah. Access road are going to be a site office. Okay. Now head office staff. Okay. So let's see. All of your answer welfare. Welfare at site? No, that is site office. Irfan. Procurement is head office. Okay. Office render, which office render? Site office or head office? You have to define carefully. Okay. So head office mean now in order to run the site, we have to have head office. They are in the head office. There will be like a accounts department, procurement department, right? QS department, even the design department, everything will be there. So they are indirectly contributing the operation of the site office. So for example, you have the one site of head office, okay, but you have the site office. So this head office working for 5 projects. So can we claim all these head office costs under the one project or 5 project? Yes, we have to distribute the cost among the project based on the project, size or value. We can say based on the project value. So as an example of the site office, sorry, head office overhead, we have the head office staff salaries, rental for the head office, utility charges that like a telephone, stationery, water, electricity, transportation cost of the staff, right? And the legal charges because you want to establish a head office, isn't it? So you have to pay for legal documentation, and you have to have the laptop, you have to have the vehicle. There are so many other costs to run the head office. So these all are head office general overhead. Now, what is the difference between the general overhead or head office overhead and the site overhead or project overhead? What is the difference? What do you think? Can you give me some key difference? What would be the key difference between the site office overhead and the head office overhead? What do you think? So head office overhead common to all project, very good. Site office overhead related to particular site. Okay, very good. Okay, so let's see what is the difference. See, the head office overhead indirectly involved with the project. Even the site office overhead is indirectly involved, but we can see directly at the site. We can see the tower crane, we can see the storeroom, we can see everything in the site. But general overhead, the head office overhead, we can't see at site. If you consider the prelim bill, the most of the prelim bill include the site overhead only, not the head office overhead. So less cost here. And the all the cost, if you look at the general overhead or head office overhead, that's coming from the head office activity, whereas the project overhead or site office overhead costs are coming from the site activities. So these are the key difference. So we have to carefully identify the all the site overhead and the head office overhead, and we have to price them. Okay, now there will be some question to you. How do we price them? Okay, anybody have the idea how do we really price them? Are we listing all the item and pricing them, or is there any strategies? How do you do? So this is a tricky point. I want a little bit explain to you. Okay, after I discuss the next point, I will explain you how it is calculated. So you will have the clear idea. So somebody saying we are using the percentage, somebody saying we need to have the BOQ. So based on the BOQ, we are pricing. Okay, let's see how it should be. Now, what is the factor to be allocated when you are deciding the overhead and the profit to your estimated price? What is the factor? How do you allocate? You have the percentage, right? There will be a 15, 20, 25, depend on the project. You have the profit and overhead margin. So how do you allocate that? There are some factors. We have to see the current workload. Okay. How much the workload we have right now? We are fully loaded or we don't have any project. Assume that you are fully loaded. Okay. What will be your profit margin? will be higher or lesser? You are having too much work in your hand. So what would be your profit margin? Higher or lesser? Okay, now we have the 50-50 answer. Higher, lesser, like that. Okay. Now, if you have the project, okay, in your hand, lots of project, your mentality is if you are getting the new project, that should be with the reasonable profit. Otherwise, you don't need to go for it. So you don't go for in general higher. You are not going to go for a lesser profit margin. You are going to go for a higher profit margin because you know the mentality, right? Okay. Now, market level of competition. Say for a one project, too many competitors. So what will be your margin? Will be high or low if you have too many competitors? Very good. It's going to be low margin because you want to come win in the competition. As you know, the original cost, actual cost of the project cannot be adjusted. That is remain same. Only the place we can play profit and overhead margin. So if you don't have much project, then you are going to go for a lesser margin. Resource requirement, okay, and we have to see whether we have the all the resources or we need any specialized resource to do this project. Then you are going to see the location factor where this project is located. Now if it is the project in a remote area, okay, no access, it is a middle of the desert or middle of the sea, are we going to go for a lesser profit margin or higher profit margin than usual? Higher, definitely, because location factor. Site condition, it is a very terrible site, okay, very difficult site, so many issue at the site. No accommodation facilities, no water facility, no electricity facility, something difficult site. How will be your margin? High, definitely high, yes. Nature of the project, if the project is simple and no complex, you can go for a normal margin, otherwise you have to go for a high margin. And the bonds and guarantees, if they are demanding more guarantees and the bond is there are risky for the contractor, so he need to go a little bit high margin, otherwise less. And the availability of the service at the site, okay, this also under the site condition also is coming. And risk factor of the project, so many risk, construction risk, design risk, right, cost risk, time risk. So there are so many risks. When the risk factor increase, what you will do? Our profit and overhead margin will be increase or decrease. If the risk factor increase, our profit and overhead margin going to be increase. Delay damages to be included, no, you have to see what is ALD, that is risk factor. So you have to increase a little bit your, as long as you see the risk, you have to increase your margin. That's what you are doing. There are so many other factors. Okay. So now before we come to the question answer, I will go back a little bit to the first slide where we have start. So I want to explain a little bit more, so you will have good idea. Okay. So you might have so many questions. So before that, I will give a little bit idea, then you can understand what I'm trying to say here. Say, now you know what is a direct cost, and you know what is a overhead, that is site office overhead and the general overhead, and you know what is a profit and the risk allowance. Now, look here. These all are cost, isn't it? This is all a net cost. In any project, we have the typical list of the overhead, right? Site overhead or head office overhead. We have the typical cost, isn't it? Now, who's preparing the preliminary bill? Who's preparing the preliminary bill? contractor or employer, or employer means the employer agent, consultant. Who's preparing the BOQ? Employer. So who's pricing the BOQ? Contractor. Contractor is pricing and the BOQ prepared by the employer. Now, where we are covering the site office overhead and then and the general overhead. The which BOQ item we are covering? Which BOQ we are covering in the prelim. Now, say if you are covering almost all the item, okay, in the prelim, you don't need to much worry. But most of the item missed in the prelim. Now, if you almost cover all the item in the site office and the prelim BOQ, your percentage will be higher or lesser. Yes, lesser. Very good. Whereas you feel so many items are missing, okay, because not covered all the prelim item. So you don't have any other provision to price. What will happen? Your margin. What is going to be happen? Margin. It's going to be higher, right? It's going to increase. So you have to understand that one. We are not going to do the double counting. Okay. So what the contractor do from the experience? Okay, they have done the number of project. They know what is the actual cost, right? This cost cannot be changed. Any project, it is going to be same construction cost, isn't it? Do you agree with me? This cost will be almost same, except the inflation. Okay, the cost factor between this direct cost, that means the construction cost, and the general overhead. Sorry, between the direct cost, okay, and the overhead and the profit margin. Okay, this percentage will be almost, there will be some calculation. They can understand, okay, if I am incurring the direct cost this much, how much I am going to incur for a profit and overhead. That percentage they can calculate. You understand? Yes or no? There will be a calculation you can do. Say if you take any BOQ, you have the direct cost, right? Direct cost in your estimation department, you have the direct cost, how much you went. And you know total project, how much you have spent. So, okay, or how much you are gaining. Okay. So this percentage you can calculate. Are you understand what I am telling, or shall I repeat? Okay, if I will repeat again once again. Okay, what I'm telling, any project, take the any project, you have the total site office and the head office overhead and the profit margin, this cost, plus you have the direct cost. So you can have the percentage comparison, how much the direct cost and how much the total cost. So you must have the comparison. Okay, this project, how much percentage went for a site office and the profit, how many percentage out of the total project. Say for example, your total cost was 100 million. Okay, now 70 million you spend for a direct cost. So how many million went for a site office and general and the profit? How much it went? 30. So what is the percentage that you got here? 30, right? So likewise, if you take 2-3 project, you can have that calculation. How much the total cost? How much the direct cost? So how many percentage it went for a profit and overhead? That calculation you can do. So this is how the companies. This is how the companies, they have calculated based on their experience how much the uh, overhead and prelim cost will go, including the profit. Now it is going to be a little bit tricky for a tender department based on the coverage what they have included in the prelim. Remaining cost they have to cover, because how they will understand whether they have covered or not. Once they done the direct cost estimation, they have the percentage, right? They have the percentage. Say they have 15 percentage, assume total. Now, when they see the proportion, now if they see direct cost, they have calculated this much. They can see whether this total price bring a 15 percentage or not. If not, there are some issue with the prelim or there are issue with the profit margin. So we have to adjust it, isn't it? So this is how they are playing the strategy to price the tender sum, to obtain the tender sum. You got what I'm telling here? It's all about how to calculate the uh, profit and the overhead margin to make sure they are covered up all their risk. So project to project it's going to be a little bit vary, but they know, because of their experience, they know how much it's going to be. Okay, is it clear for all of you? Okay, so let's go to the question and answer. Okay, so maybe you can ask your question if you have. I have some question also. Now this is my question. Okay, how do you make sure that your tender sum is correct? Now you done the tender sum, right? How do you know whether you are right or wrong? Whether you done any error or your price is less or high? How do you know? What is the mechanism? So lots of answer here. All of you focus on the question here. How do you make sure that your tender sum is correct? Now you work for a tender department. You have done all the pricing. Now you have the tender sum. But how do you know your price is right or wrong? How do you make sure? I believe all of you can see everybody chat, right? Yes or no? So I don't need to read, isn't it? If you can see. No? Oh, yes or no? You can see everybody chat? No. Oh my goodness. Okay, I only seeing. Okay, let me read the chat for you all. Okay, I thought you can see. Anyway, no worries. So I can read the answer for you. Whoever done, compare with the engineer estimate. Good answer. By calculating the unit per square meter. Yes, estimation. He's talking about the estimation. Okay, good. Compare with the previous project. Okay, benchmarking. Very good answer. Okay, then from build up area calculation based on historical right. Okay, that is the estimation. Pre-tender estimate comparison. Pre-tender, yes, you can do that one if you are a consultant, but now we are on a contractor side. Okay, so we don't have the pre-tender estimate. That is with the engineer. Engineer don't give you the pre-tender estimate. Compare the net and overhead percentage with the previous project. Okay, that is not the right answer for those. Unit rate per square meter. Okay, that like a benchmarking. You can get it some extent. Okay, recent finished project. Okay, that's fine. Recheck by other alternate QS. No, that is not the way. Okay, and need to double check. Okay, you can do the double check for error, but still you can't make sure unless you do that testing. Okay, now these are the typical question all of you answer. Now let me explain you what is the real things we have to do. Okay, so no worries. I will read all the question here. Okay, whatever coming. How do you make sure that the tender sum is correct? Now, when you are doing the tender, you know the what is the net cost. You are doing your calculation of the net cost. right? Net, that is for a measured work, mean actual work what we are going to do. Then you have the prelim items, so those net cost. Okay, then all the PC and the PS, mean prime cost and the provision sum, all the attendance you have to add, and all the domestic subcontractor value of the work. So you have your tender sum. How do you achieve? Subcontractor cost, material cost, labor cost, and the plant cost. This is your direct cost, isn't it? It's a direct cost. At the same time, your operational team, the project management team, based on the project, the tender program, they also do the operational estimate. What is operational estimate? Okay, in order to do this particular project, how many labors we need, how long we need, how much the material we need to procure, and how much the plant and equipment need and how long need. They know from their experience. This is called operational estimate. This is called quantity estimator estimate. You have to match these. You have to compare, and that should be match. Approximately around 10 percentage difference coming. The tender sum is fine, no issue. But there's a more deviant like 20, 30. There are something issues. Okay. So this is how you make sure operational estimation and the estimator estimates are matching. If that okay, then that is a total cost, actual cost, direct cost. Okay, you understood how it is work now. Is it clear for all of you? Okay, Atif say there are operational team will give higher price. Okay, if that's so, they have to justify where it is, why they are giving. If they are focusing more risk now, say for example, in practical, right? Either this estimator, okay, estimator, or this operational team, they can overprice it. Possible. So that should be compare and check. They can check it easily. Now this is substructure, this is superstructure, elemental wise. They can have the comparison. They can troubleshoot where the comparison, where is the mismatching, where's the more deviation happening. Then they have to again verify each other. Then they have to finalize the price. You understand? If they are mismatching with the price level. Okay, so as another thing is now time given to prepare the tender document, tender submission is less. So how we are managing? Yes, that is very big challenge. That is the issue nowadays. We can see so many issues during the post contract. Contractor don't have time to read the drawing. How he can price it? So during the post contract, all the ambiguities are identified and bring the troubles. So better to give is a advice to give sufficient time to do the tender preparation and tender sub evaluation. Okay. Okay. In what aspect these calculation are different from both? For example, okay, Prasanthi. Yeah. For example, say concrete item. Okay. Maybe operational team maybe price it higher because they always think about the wastage and other factors and site issues. Whereas the quantity surveyor, we only rely on the design drawings, right? So we are theoretical, they are practical. So if you see the vast, the difference may be like a main item like a concrete, one of the key item in the project. It's a vast quantity wise and the price wise, or reinforcement or finishes. So we have to see why this different happen. it is happening, overpricing will happen. So that should be troubleshoot. It can be troubleshoot. You can see section wise. Okay, for how much your subcontract, the substructure cost, and my substructure cost, or how much your finishes cost and my finishes cost. Like both the operational team and the estimated team should be sit and they have to identify. Okay, fine. Now, do you understand how do you make sure that tender sum is correct? Yes, you have what we call, sometimes we can say it's a benchmarking also. Okay, you don't have the operational team estimation. What we can do the benchmarking. How we do the benchmarking? There's a next way. Okay, say you are doing the apartment building. Okay, you can see what is the apartment building next to you, recently completed, how much they have incurred. Okay, you see your estimation and their uh, product price, then you can have the comparison, you can have the idea, okay, whether your price is okay or not. Now if you see in the particular area, it is very famous that how much the square meter cost. So based on that also you can have the comparison. So these all are benchmarking. Okay, so now this question is clear, right? Might you all have lots of questions, so don't put those questions during our discussion. I will give the time. That time you ask, so better I can answer it one after one. Okay. Okay. How do you calculate the concrete cost per cubic meter? Now we have know all in rate, right? We know all in rate. So all in rate for a material, all in rate for labor. So based on that knowledge, how do you calculate the concrete cost per cubic meter? Can you tell me, all of you? So in between, don't ask any different question, dears, because I will give time. So time all of your question are one after one. I can clear. Okay, we will take the time around 15 minutes for that. Okay, so how do you calculate the concrete cost? Now somebody had a question where we are going to cover the material cost, where we are going to cover the labor cost, plant and equipment. So here is the answer. Okay, let us see. Now, when you are calculating the material cost, that includes cement and aggregate admixture water. So that means, what do you mean by cement cost? It is a just cost or all in rate? What do you think? Cement cost, just a cost or all in rate for cement? All in rate. All in rate for sand, all in rate for aggregate admixture water, all in rate. Okay. Again, cost of labor. Is it just a rate, how much you are paying as a salary, or all in rate for labor? All in rate. Very good. Now, cost of plant and equipment. So we have mixer, concrete pump, so many things. Okay, small tools. Are we going to put the just a cost or all in rate? All in rate. Okay. So these all are all in rate cost. So if you done the all in rate, okay, with that you are going to add the overhead and profit on bottom. Okay. Either there are net unit rate and the gross unit rate. Both possible. Okay. The net unit rate is without profit and overhead, we can say. The gross unit rate with the profit and overhead. Both way you can do it, but it is better to follow what is your pricing methodology. Anyway, I just going to give how the cost per concrete cubic meter you are going to price in the BOQ. That should include your overhead and profit. So this is how you are getting the total cost per cubic meter. Okay, so now it's clear for you how we are utilizing this all in rate when we are calculating the one item rate. Okay, somebody asked what will happen if you have already equipment in prelim. Then do not need to price here. That is covered already in prelim. So otherwise you are double pricing, your overall tender sum will be more. in some project include steel and formwork. Yes. In that case, okay, they say the concrete cost should include the reinforcement and the formwork, even the earthwork support. Then you have to cost all of them. Okay, is it clear for all of you now? So how we price the concrete per cubic meter? Okay. Now I have some more question. I will ask you, okay, to give my opinion. Also, you can have your own thing. So what is the difference between domestic subcontractor, nominated subcontractor, and named subcontractor? All of you. You can type your answer. Then I will explain. So you can type all of your answer. Then I will disclose my answer. Okay. Okay. So I got enough answer for domestic and the nominated. What about the named? What do you mean by named subcontractor? Okay, named mean he has a big name in the market. No, that is not the right answer. Okay, no worries. Okay. Okay, fair enough. I will explain to you all. Okay. So these are the terminology we must know. Domestic subcontractor mean this is a subcontractor introduced by the main contractor, his own subcontractor. Okay, that subcontractor brought by the main contractor, that is called domestic. Nominated subcontractor mean the subcontractor introduced by the client or client agent, mean the consultant. So that is nominated. So nominated by the client or client team. He is not brought by the main contractor. He is brought by the employer. The name subcontractor mean there are list of subcontractor name given on the tender or contract document. Like you can say it's also nominated, but you know, if you want to appoint any contractor, domestic or nominated, you have to go with the approval process of the client. But name subcontractor mean there are say 1 to 10 name, like a vendor list we can say. Those subcontractor you can hire, you don't need the prior approval from the employer. So that is what it is a name subcontractor mean. You can hire them anytime. He is not a nominated, but he is a named. He can come to the project anytime if you no need the prior approval. Okay, like a pre-approved list. Is it clear now, all of you? So you know domestic and the nominated and the named. Yes. Okay. Next question: why employer prefer to use a nominated subcontractor? What do you think? Why? Yes, previous experience, control the quality, avoid dispute. Okay, that's a reason. The nominated subcontractor known to the employer, he is recommending mean he like his work, or they have good relationship, like a control mechanism. The nominated subcontractor, even he is going to work under the main contractor, but he's like a supervision. He will be supervising. He will be work for an employer benefit. Okay, so quality control, supervision, and the trust and the relationship. There are reason. These are the reason employer prefer to use the nominated subcontractor. So who is responsible for nominated subcontractor delay? So now even though nominated subcontractor can delay the project, so who will be responsible? Main contractor or client? Very good. The right answer is, I will tell you. Okay, all of you, hold on. The nominated subcontractor brought by the employer, there's no doubt. But he is reporting to whom? Who's paying him? Who have the agreement with the nominated subcontractor? Client or contractor? Contractor. Okay, there's no doubt. All the subcontractor and the main contractor only. There's no direct agreement with the client. So any subcontractor delay, even nominated subcontractor or domestic subcontractor, who is the responsible for the entire project? Main contractor. Therefore, nominated subcontractor delay will be responsible under whom? It's going to be under main contractor only. Okay, no employer. Will you go for a purchasing a plan or renting a plan? How do you decide on that one? What is the factor? Whether you are going to procure or you are going to rent out? How do you decide? What is the decision making factor? Okay, so many answer here. So we can say whether duration of the project is a short term. First, we have to say whether we have already the availability of the plan. Already we have another site, no use. We can bring it here. Okay, then we can uh, transfer it. No need to even procure or rent it. Or okay, we don't have that plant. We are going to buy or rent. Now we have to decide how long the project going to run. We have to calculate both way. Renting cost, all in rate for rent, all in rate for procurement. Okay, we have to calculate both calculation. Then which is profitable, you have to choose it. So that factor depend on the time, right? Even you have to think about the initial purchase cost, whether we can accommodate that much money or not. So these are the factor. Okay, initial purchase value and the profit factor, whether it's better to go for a own or rental, you have to do the calculation. Mostly if you are, if the project duration is longer, better to procure it. But again, if the contractor don't have that much capital, then better to go for a rental, right? So depend on the so many factor we have to decide. Okay, can you answer the simple question? A draftsman visit a site to prepare as-built drawings. How or where the contractor will recover this cost? I need a little bit precise answer. General answer is under preliminaries, but if you are saying more precise, it's under the general overhead. Okay, somebody asking what is the difference between the preliminary and the site overhead, you can say site overhead and the general overhead also there, and prelims also there. What is the difference between them? Actually, there's no difference. The prelim is part of the overhead only. Most of the overhead item covered under the prelim. Most of the overhead item, which is indirect cost of the contractor, will cover under prelim. So with that one, okay, let's conclude. Thank you for attending. See you all with the next CPD.